There's so much within the regulatory space. Yesterday, on every single panel, it took up a majority of the discussion. Good, bad, people were voicing concerns, they were voicing support of certain things. So I'm curious, from your seat, what to you is this moment for the SEC? How do you think the financial market is viewing your organization and all the efforts that have come forth in terms of the proposals or suggestions of change?
Well, first of all, I do have to give my disclaimer, which is that my views are my own views, not necessarily those of the SEC or my fellow commissioners. I think it's a little bit sad to hear you say that all of the talk or much of the talk was about regulation, because I think ultimately markets can function broadly within a broad frame of regulation, but it's too bad when regulation is driving every detail of how markets operate. As far as how the SEC is perceived, I mean, I think right now we're like the kid in the back of the class who's kind of, throwing his hands up and making a lot of noise trying to get the teacher's attention. We're throwing out lots and lots of rule proposals, and we're forcing people to respond to a lot of things we're doing. So I think probably people are paying a little more attention to us on the regulatory front. Although, market structure has been a topic of a lot of work in the last couple decades. So it's not as if this is entirely new, but there are certainly lots of proposals out there. And so I think we're getting, I'm hearing a little bit of frustration from people about how much is changing potentially so quickly and simultaneously.
So there are a lot of proposals, to put it mildly, and you've voiced your opinions on many of them, some dissenting. I'm curious to hear first, are there any that you're in support of and you think would be good change for the market in general?
Yeah, certainly there are. I mean, I think that some of the issues that the proposals go toward are important ones for us to be thinking about. Shortening the settlement cycle, I think, is something that everyone can come together around. It's a question of how much do you shorten it, but I think people are generally aligned at doing it. And then there are questions around how long do you give for implementation, and are there other considerations that you need to take into account. Some of the transparency initiatives I think are important. Transparency around short sales, I think there's a good reason for that. Some of the concerns around government securities markets and trying to think about if there's anything more we need to do there, I'm certainly open to doing it. Of course, implementation matters, the details matter, but to the extent I can be supportive of things, I'm willing to do that. Even the dealer definition, which is a proposal I had some real concerns about, I appreciated the fact that we are putting a proposal out there to try to further define what a dealer is, and that is something that sometimes we tend to do just through enforcement actions, and I would much prefer that we do it through a notice and comment rulemaking process and get feedback on it that way. And I do understand some of the concerns around active market participants in the Treasury markets, trying to think about what the right regulatory framework is. At the end of the day, will I get there on all of these proposals? I don't know, but I'm certainly open to being convinced one way or the other by the commenters.
And what are the ones, if you had to focus on maybe one or two, that you think would be or are a big concern to you and you're not in support of in terms of change?
Well, I think a lot of what the SEC is doing just generally, I mean, even outside of the market structure area, is really changing the way we're regulating. It's making us a much more active regulator. And within the market structure framework, I mean, I think there's a view that every active participant in the markets needs to be subject to some form of regulation. That's not necessarily something that I believe. I think there are times when regulatory obligations are appropriate, but I think we have to be very careful about saying to anyone who's a liquidity provider, you have to be within a regulatory framework. It's almost like dissuading people from coming in and providing liquidity. And it's fine, people say, well, it's not really that big of an obligation that you're putting on people, so what's the big deal? We just want to know who these people are. And I get it, but I also see that once you have a registration regime, then just watch, and a few years later, it's going to turn into something more. It's going to turn into something like is happening on the private fund side, where it started out as just all we want is a census registration. We just want to know who these hedge fund advisors are, and then it turns into the private fund proposal that we put out, which is basically we want to regulate private funds just like retail mutual funds. I'm exaggerating slightly, but not that much.
So are there certain actions then that you see as going too far?
Yeah, I mean, I think as an example, the Reg ATS proposal, I mean, it's hard to know where to start on this because we've got so many different proposals out there. But as an example, the Reg ATS proposal is one that includes this new concept of a communications protocol system. And I really don't know what that means. And I don't know what the implications of pulling all of those into a regulatory framework would look like. And so that's one where we've gotten lots of comments from people who kind of read communications protocol system the same way I did, which is looks awfully broad. The proposal itself suggests there are only 22 of these, so there's clearly some mismatch in expectations about what it's going to cover. But I think the problem is you put a rule like that on the books and people tell you, don't worry, we only intended to cover 22. But then 5 years from now, someone looks back and says, or 2 years from now, someone looks back and says, oh, well, this communications protocol system is broad enough to include, whatever, and they pull in all the kinds of things that we were told weren't supposed to be pulled in.
If you were SEC chair, what would you focus on right now?
Well, I think there's some good areas that, and I think that Chair Gensler intends to do some work in this area too, fixed income market structure issues. I might not agree where he goes on that, but I think the real benefits to retail investors that you can make in making some changes on the fixed income side are probably greater than they would be with changes on the equity market structure side. Transparency is good. Generally, right? They're always, you have to be careful about how you put it in place, but is there more that we can do to enhance the transparency in that market? That said, I worry too that we've spent a lot of time on equity market structure, and it's gotten us into this very micromanaging role. So if we turn our attention now to the fixed income markets or the options markets, where I might want to turn attention, is that going to lead to micromanaging those markets in ways that actually stifle innovation? That's something that I'm concerned about. 15C211 is a rule that we adopted we modified it under Chairman Clayton, and then lo and behold, we're starting now to interpret it as applying to fixed income, which no one ever thought it did before. I think that is one place where I would start and say, okay, let's take this outside of the 15C211 context and let's consider fixed income on its own and figure out what's right in that marketplace. So that's something I would do. There are other areas like transfer agent rules are ones that really do need to get updated. And people have been talking about it for a long time. The commission sort of made an effort, I think it was in 2016, to move things forward, and it's just stalled since then. That's an area I would spend some time. Again, I think there's some of the things that are on the agenda I would be thinking about, shortening the settlement cycle, things like that, as I mentioned. So there's plenty of bread and butter work to do. I would like to work on updating the record-keeping rules, which again, for broker-dealers, which is again on the agenda. I hope we get it right, because it's been an area where because we haven't modernized those rules, we've forced people to spend a lot of money on record-keeping systems to satisfy our requirements without really generating any benefit. If we instead allowed them to use the systems that they use normally for their own record-keeping requirements and then provide us with records using those systems, it would make a lot more sense. So I'd like to see us do some modernization of things like that. So my agenda, if I were chair, would be a lot more boring than the existing agenda.
So I have to ask of part of the existing agenda, payment for order flow. This has been a controversial topic and one that is under scrutiny. And I'm curious what you are seeing, hearing from your seat. What are your opinions? Maybe let's start with that. And then what do you think the actual goal and timeline is for the SEC on this topic?
Well, Chair Gensler has said that he wants to look at payment for order flow. So it's clearly something that, and when he says he wants to look at something, he usually does. So I'm anticipating that this is something that will happen relatively quickly, and I think as part of a broader look at equity market structure, because every chairman of the SEC comes in and has some plan for equity market structure, and Chair Gensler is no different there. What my concern going into this project, well, I have two. One is that we had some prior changes under Chair Clayton that are in litigation now, and so it would be nice to see some of those things get implemented before we shift to the next phase of market structure reform, and to kind of see where we stand after that. My second concern is that I think retail customers have a very good, it's never been better for them in the markets in terms of they can free commissions, they can trade whenever they want. There's great liquidity for them. I mean, again, it depends on the security, but by and large, the securities that retail traders are trading, they have it really good. And so whatever we do, I don't want to make it worse. I think some of the people who are looking at payment for order flow, or looking at making other equity market structure changes, are not that keen on retail investors trading frequently. And I get it. I mean, they look at retail investors and they say, you should just be involved. You should just be invested in diversified funds, and set it and forget it. And you shouldn't be in there every day trading. And so, why not put a hurdle to make it harder for people to trade, or more expensive? And that, my view is, this is a free country. People make their own money and they can decide how they want to spend it. And so we should be in favor of whatever the most efficient kind of market structure is. I think there are legitimate concerns about the amount of off-exchange trading, because it does affect the content and quality of the data on which people are trading. But I think we have to be extremely careful. There are things I personally really don't like about the rules around market structure. But even there, I would be very careful about making changes.
What is it specifically that you don't
like?
Well,
I mean, I'm not a big fan of NMS. I'm not a big fan of the order protection rule. I think it's not, I think it's not necessary. And I wasn't a fan of it when it went into place, and I'm still not a fan of it. But again, I think we as regulators have a tendency to want to go in with a scalpel and say, okay, well, I'm going to cut out this rule because I don't like it. And it will have follow-on effects. And so you have to be extremely careful in how you go about doing that.
I want to dive into another asset class that you've been tied to, crypto, digital assets. And last week, with the fall of Terra, where do you see the role of regulators within this space?
Yeah, I mean, regulators have been talking a lot about crypto now I've been at the SEC since 2018, and it's certainly been on my radar since then. And I sort of went into it thinking, you know what, we don't need to do anything special for crypto. The securities laws are intended to be flexible. They're intended to accommodate new things as they come along, and so let's just shove crypto right into the existing framework. But as I talk to more people, I think I realize that there's some unique aspects to the technology that require us to use our exemptive authority. And Congress, when they designed the SEC and they gave us our authority, they understood that things would change. And so they gave us this exemptive authority, and we should be using it in crypto, and we're not. Instead, the approach the SEC has taken has been an enforcement-first approach. There's plenty of stuff to use our enforcement resources to go after. There's a lot of fraud in the crypto space. We see this anytime there's a new flavor of the day. people dress up their frauds in whatever the flavor of the day is. So plenty of stuff for us to do there. But the notion that you can regulate a market by bringing enforcement actions, which will then craft a framework within which everyone else can operate, is ludicrous to me. And that's the approach we've been taking. So, speaking specifically of last week's events, obviously that was a massive event. I'm not going to talk about the facts and circumstances of any particular crypto project, but I will say that times like this remind people that markets don't always go up, and you need to be thinking about what you're putting your money into. A lot of money that has gone into crypto has been institutional money, and a lot of the institutions have counted on the fact that there are retail investors out there, retail purchasers who are going to be buying in. And I think everyone needs to take a step back. The industry needs to take a step back and realize that when a lot of retail investors or retail people get hurt, it's not going to have good consequences on those people's lives, and you should care about that. But it's also not going to have good consequences on what regulators think of the industry. So there's definitely space here for self-regulation, and by that I don't mean a formal organization, though that's a possibility certainly, but some rational consideration of where money is going, whether things are growing too fast, whether someone needs to step in and be critical. And one of the things I like about the crypto world, as we were talking about Twitter before coming on, and one of the things I think is great about crypto Twitter is that there's a real exchange of ideas. It's often in a very crude way, which I would prefer it would be cleaned up a little bit, but it's certainly people are criticizing each other's projects, and that's very healthy. People need to be pointing out when they see there's a flaw in something. It's important, though, that we allow experimentation, and that's what I'm concerned about coming out of this, that regulators say, okay, we're going to just try to shut this down and have it all happen in a way that's very, that will only allow a few large providers of stable coins, and and they have to be centralized, and we're, try to control everything. That is also not good because it doesn't allow people to do the trial and error that's necessary to see what works and what doesn't. So it's natural for there to be failures. From failures, people need to learn, but we as regulators need to allow there to be failures.
What other learning lessons did you take from the events of last week within that space?
Well, I mean, I think, again, it's very important to be skeptical always. I do think, I mean, this isn't so much tied to what happened last week to Terra, but just in general, crypto prices, a lot of crypto prices went down, and everyone said, see, look, crypto prices went down. Well, yeah, a lot of other prices went down last week too. So I think it always amuses me a little bit. I guess one thing I learned is that people will always, a certain set of people will always find the negative anti-crypto angle of anything that happens and ignore what's happening elsewhere that might also be negative, but they want to just focus on the anti-crypto. Look, I'm a regulator. I'm not a crypto advocate, but I think allowing people to experiment with things is very important. And I think allowing us to see, us as a society, to see whether crypto can bring us lasting benefits is very important. And so I hope that we as regulators can have a little bit more of an open-minded approach than we have to date.
What other innovations, even outside of crypto, have you heard about or are looking into that you think would be a positive in terms of the development and moving forward within market structure as it currently exists?
Well, I mean, I think another area where Chair Gensler has talked a lot, he coined a new term, digital engagement practices, I think they're called. So he's got this focus on how financial firms are interacting with their clients, with their retail clients. And I think this is, well, I guess it's not only their retail clients, but with their clients more generally. I think this is a really important area where there's a lot of technological development. There's a lot of really interesting stuff happening with artificial intelligence, for example. And I hope that we don't come in from a regulatory perspective to say none of that can happen, because I think one of the problems for the financial industry in general has been, because it's such a highly regulated industry, it's not where technologists have wanted to go to do their innovation, because it's just, there are too many regulatory boxes to check and permissions to get, and so the innovation happened outside. But some of those innovations could be very useful in this space. They've tended to stay only on the institutional side, and so if we were more open, I think there'd be more of that technological revolution in the way that firms interact with their retail clients. Now, I understand there's some really real concerns that people have too. Of course, artificial intelligence can have all kinds of bad effects when it's put in place as well. And so I think that's something that Chair Gensler is thinking about. But I hope that whatever we do as a commission on this issue doesn't just say trading has to be really boring, you can't have anything that will draw people in, because there's a real possibility now with technology to get people information in a manner that they'll actually consume it, think about it, and make better decisions based on it. I get also that sometimes people will make impulsive decisions based on a nudge from technology, but it can actually do a better job at conveying information. So I'm enthusiastic about the idea of us maybe making it easier for people to use whatever it is, virtual reality, artificial intelligence, anything else, and better communicating with their customers.
And as much as you can share about the SEC's future goals, actions that are new and you think potentially game-changing within market structure, can you talk about broadly some of those?
Yeah, well, I think
major.
Chair Gensler has definitely signaled that he has interest in doing something on equity market structure, and usually equity market structure initiatives are not small. I mean, some of the stuff we've done is discrete so far, but I anticipate that he'll want to do something more broadly on equity market structure and fixed income. But what exactly it will consist of, I think we're all waiting with bated breath to find that out.
How long do you think, is that something that can be implemented within weeks, months?
Well, implemented, I hope not. I mean, I don't know, but in terms of when that gets done, look, everyone at the SEC is working very hard, and so I think you saw a spate of proposals come out over the past several months, and people have been working hard in the interim, so I'm guessing that you'll see a spate of proposals coming again. I do urge people to look at the regulatory agenda that the Commission, all regulatory agencies publish these things. They come out in the fall and the spring, ish. They sometimes slip. So I would say, keep an eye on that when the next one comes out, because I think it's informative. I think Chairman Clayton and now Chair Gensler have put on that agenda what it is that they plan to do, and they move forward with it. So it's worth watching.
So more proposals to come.
That's my anticipation. This chair is definitely someone who has a lot of energy, so I think that gets reflected in the number of proposals.
And in terms of that action, that activity that is still continuing, I'm curious, on the panels yesterday, timing was brought up a lot in terms of how much content is out there that needs to be consumed, how little time there is to consume it, and to respond. So what's your view on the 30-day comment period and the engagement that your organization has with these financial institutions that would be impacted by any change?
Yeah, I mean, that's something that's been a real concern for me. I think it's even if we were doing 3 proposals instead of whatever number we've put out, I would want to have longer comment periods so that people could really think about things. Some of these are very long and they're very complex, and people just need more time to be reviewing them, talking to other people, and gathering comment. A lot of them require firms to go and talk to their IT people. That's really important in terms of understanding how it will be implemented, but also how long it will take. And then there's the concern about how are the rules going to interact with each other. And when you're throwing out a number of major rulemakings at the same time, that's really important for people to be thinking about. And so as the letters are coming in, I'm looking at them, although I look at them sort of, I haven't done a wholesale review of the comments in any of the comment files yet, but I've been reading them here and there, and some of the comments have me very concerned because I think, when I read them, everyone's very nice when they write to the SEC. They say, oh, we really appreciate that you're working on this, and we think it's wonderful, but we think you got these 10 major things wrong. And then I think, that's them saying that after looking at it with a short comment period. What if they actually had more time to look at it? How many other things would there be wrong? And this is not a criticism of the staff at the SEC. They're working very quickly and trying to get these things out the door. So you're not getting the attention at the staff level because they don't have time. You're not getting the attention at the commission level because we don't have time. And now you're not getting the attention from the public because they don't have time. And that seems like a recipe for disaster. And that has been reflected in what I've seen in some of these comments, that commenters think that we've misunderstood how things work now. And so trying to change things without understanding the status quo is very dangerous. And so it's something I'm very worried about. Longer comment periods would be helpful. I think Chair Gensler has been hearing that from a lot of different constituencies, and I think that's good. I hope that we will, if we see that we've kind of missed the mark on things, that we'll use reproposal, opening things up for comment again, which probably a lot of people don't really want to have to comment again, but in order to get the rules right, it's important. And then I think if we're going to move straight to adoption, we need to be thinking about implementation periods. Again, because this commission is moving fast, I think there's an expectation that the industry will be able to move fast to implement also. But especially when you're trying to implement lots of different things, and again, the IT resources, I keep coming back to that, but thinking operationally about how you're going to put it in place, how you're going to get those dedicated resources to put the rules in place, you need to have some lead time to do that. And so I really hope that we are able to build in the necessary lead time to listen to people, decide maybe to repropose if that's necessary. But yeah, I understand why people are talking a lot about it. It's certainly a concern for me.
If misunderstanding is cited as an issue, just not being by the basics and seeing it day to day, how do you, as a regulator, learn about the intricacies of the market that's really complicated, and then hope to take that understanding to make informed decisions?
I mean, it's difficult. We talk to people. I guess I'll take this opportunity to say that anyone who would like to give me a little educational session, I would more than welcome it. I would be thrilled to have that opportunity to just have someone walk me through, what do you do, on a day, what is your daily task, what are they, and how do you do those things? It's important for me to see that, and I think it's important for others at the SEC to see that. We have really benefited from having advisory committees that have brought in a bunch of experts to talk about these things together, or roundtables where we can have those conversations. And we do have people at the SEC on the staff who have deep experience, have been out in the industry, or have been regulating for a long time. But things change fast also, and so I think that constant education is very important. And again, that's why I welcome these comment letters. They're very helpful and very patient in explaining things, which is really important. But please do invite me to learn more from you directly. I would certainly welcome that chance. And I think it's important that others at the SEC get similar invitations. I know it can be a drag on your time, but I think the return on that can be very high, because then it's much more real to me when I'm reading the rule and thinking about how it will apply in practice.
Mm-hmm. All right, well, you all have this invite, apparently, for education. So a year from now, if we were sitting down, what do you hope, if there is some change that gets through, what do you think should be the first priority or the thing that actually gets done, knowing that it takes time?
Well, I mean, I think shortening the settlement cycle is sort of a first thing to really focus on. Better data, pre-trade transparency in the fixed income markets is something that I think we should be thinking about. So I guess those are some of the things that I would say. I mean, a year is actually pretty quick. So I'm a little bit hesitant there, because you can have a rule in place, but when it will actually be implemented, I think we need to be very judicious in how we go about this. But I think just focus on the bread and butter is what I would say. Where are we seeing the problems? Where is the biggest bang for the buck in terms of what retail investors will get out of a change? That's what's important. Look, the markets, the equity markets now, to focus just on equity markets, I think are very complicated, and I wonder how much of that is due to regulation. And so I would like us to take a broader look at some of that stuff too, to say, is there anything that we're doing as regulators that is making things worse? That's kind of how I always would like to do it. So there's that side of it, and then where are people in the market seeing the problems that we need to be doing something? I think that's the other piece we need to look at. But again, as I just said, I don't know that we should spend all our time thinking about equity market structure. Another topic that comes up all the time, of course, is market data. That's an area where their passions are very strong on all sides of that issue. We are in the role, a very uncomfortable role for me, of being sort of a price setter. And so trying to get some clarity on how exchanges should be thinking about that would probably be helpful as well.
Mm-hmm. Now, there's been, I mentioned pushback earlier. There's also been lawsuits from dealers, from exchanges against the SEC for things that they do not agree with. Why do you think this has built up in this way? And do you think that it's a problem for the organization?
And people sue because they've got a lot at stake. And so it's not surprising to me that people sue. It can make things very difficult from a regulatory perspective, because you think that you're going to adopt a rule and it's going to go in place, and then there's a lawsuit. But look, this is a free country and people can sue their regulator, and I think it would be very unhealthy if we lived in a place where suing your regulator had bad repercussions for you. I think we need to we need to be able to have very open, raw conversations with the industry as well. They need to be able to tell us when we're getting things wrong. They need to be able to tell me when I'm getting something wrong, because that, I think, will lead to a better regulatory structure. It would be nice, though, if we could adopt rules that we had carefully considered and everyone was happy with, and we could put them in place. But I mean, it's a world where a lot of people have a lot of money at stake, and or change in the rules makes a big difference for them. That's just one of the realities of this industry, and I think most industries.
Is the communication, the back and forth between your organization, the industry, the finance industry, is it difficult? Is there a disconnect? And could there be things to make it more efficient, to make the dialogue effective?
I mean, we could end COVID. No, I mean, I think the communication, there's a lot of communication. I don't know that there's anything that could be done to make, I mean, so there are a lot of rules around how we have to communicate. For example, if you're writing a rule, I used to be a rule writer. I wrote rules for mutual funds. And so one of the things you try to do is, at the time, I was the one who wrote the economic analysis. Then I would give it to the economists, and they would take a look at it, and I would try to get them to sign off on it because we usually didn't have a lot of time for them to look at it. Now the economists are much more involved early on in the process, but there's still the issue of trying to get data and trying to estimate how much a rule change will cost. And so at the time, we were allowed to go to 9 firms, 3 small, 3 medium, and 3 large. You can't tell them what you're actually doing because you can't tell them, if the proposal hasn't come out yet. And so you're really trying to estimate based on very poor information. We're a little bit better now because, again, we got a lot of economists at the SEC now. That's a change within the last 20 years where we've really beefed up the ranks of economists. But still, figuring out how a rule will affect people is very difficult. So I would say that the best thing people can do is provide us data. That can help us be a better regulator. In response to particular proposals, it can really help us have a much better sense of what the consequences will be. So that's one way, I think, to improve the process. But it's everything is governed by some rule. The reason that there was a limit on the 9 people is because if you talk to more than 9 people, you have to actually do a rulemaking to get approval to talk to more than 9 people. And so everything ends up being a little complicated. So give us data when we ask. Don't be surprised if we're saying there are holes in our data. It's good. I think the sign of a good economic analysis to be out there and say, look, here's what we know. Here's what we're assuming. Here's where there are gaps in our knowledge, and you can help fill in those gaps.
I'm curious, as commissioner, in this organization, you are often the dissenting opinion. Is it hard to get those opinions across? Do you feel like you're being heard, or do you feel as if there could be certain things or ways to make it better?
Well, if I were heard, I wouldn't be dissenting. I would be, well, I guess maybe they hear me, but they just don't agree with me, which is fine too. I mean, look, I think it's important in a 5-member commission for everyone to bring to the conversation something different. We're down to 4 now, but typically 5-member. We all have different backgrounds. We all have different ways of thinking about things, and I tend to be more on the side of there's a role for regulation, but that role needs to be justified. The baseline presumption should be that when 2 people or 2 institutions want to come together and interact with one another in the marketplace, they can do that. They don't have to ask anyone's permission. That is not necessarily the way that some of my colleagues look at things. And so I think it's really good to have that variety of voices in the room. And I think it's better when we're all on the same page, when we can all come together and we can all stand behind a rulemaking. We can say there's an identifiable problem we're trying to solve, and we've got the solution for it. But when there isn't, I feel like I have to lay out my reasons for dissenting, and then let the commenters tell us who's right and who's wrong.
We have time.
Maybe we're all wrong.
Hopefully not. We have time for one more, so I want to leave on this note. With all the noise and all the comments and things that are being digested at this moment, what do you think is the best case scenario in terms of actual action that can happen? We talked about a year time frame, but I'm just thinking about moving forward and what you think would be best case scenario if there is change. What does that look like on the other end?
Well, I mean, best case scenario is that everyone comes together in a kumbaya moment and says the market structure is perfect. It works great for small companies trying to raise capital, for large companies trying to raise capital. Investors can all participate in our markets. We've got widespread participation, not just among a small portion of our population, but everyone in our population is participating in the markets. They're able to do so with good information about pricing and good information about the risks that and the opportunities that come with investing in that security. So I think that's kind of what we're all striving for. But we're all flawed humans too. So I know that that's not going to. It's always going to be an iterative process, and we're certainly in a period of high iteration, I guess. So I hope we'll slow down and listen to what people have to say, so that we can implement changes gradually enough so that we don't disrupt markets instead of making them better.